Welcome back to the Daily Journal. So let's review my two trades from the London session on Nasdaq's price action this morning. So going into the session, my bias was bullish simply because clearly we've been trading up. We also closed above this 4-hour gap to invert it, and we had these relative highs above us, right? Previous week high, previous day high. Now ES had taken those highs out, but we had closed above that, and that was in yesterday's New York PM session. So I was looking for continuation into this 84 gap to trade to these relative equal highs. So that was the plan, right? But unfortunately, I let some old habits creep in, a bit of impatience, and I didn't wait for an A+ setup. Now, an A+ setup for me was following the plan, letting price trade into this 4-hour gap. Now, had we opened up the 2 a.m. session and started to trade lower, this setup right here, which I'm about to talk about on the 50-minute charts, would have been A+. In addition to that, had we not had this fair value gap, this resistance here, this would have also been higher probability. So going into, this was now the 3 a.m., so this is the London Open. Price traded straight into this 50-minute fair value gap, as well as this 50 minutes swing low. So when I saw that wick, it caught my attention because here is a change state delivery. So with that close of that candle, I was looking for price to trade back into ideally this order block, to then come back into this wick before continuation. So once price started to trade up, this is where my emotions got the better of me, unfortunately. And I anticipated the inversion of this 50-minute gap, because look at the stunning accumulation, manipulation, distribution on this 50-minute chart, right? And you can see it here on the lower time frames with the AMD curve, accumulation, you had all these relative equal highs, you had all these inefficiencies, and you had these relative equal highs at the top here with this nice original consolidation. So I anticipated the inversion on the 50 minutes, and that is a recipe for disaster, right? Because here's the thing, I looked at the standard deviation. This was not a protected low. A protected low would have been if price had traded into a fair value gap here, then traded it back above those down close candles. That would have been a protected low. So I'd market ordered in for this, and it was all looking good. I was looking for that, and then continuation. So a solid 4.5-hour trade was worth the risk. I only took one contract in the 50k accounts. So it was, I think, came up to like $25, something like that, for a loss. So it was worth a go, but it didn't play out in the end. And that's why I've got rules. That's why we should all have rules, right? So, given the fact that this was still, 8 minutes until that 15-minute close, I was just asking for trouble, right? The 1 minute, close above this for this breaker block was not going to hold a 15-minute resistance. Because here's the thing. Now my mind went back to that previous day high that had been taken out by ES. And so I quickly journaled that and then came back to the charts. And then let's look at this from a different lens. So going to the 1-hour charts, that is where I wanted to go long from. So why would I not trade short to that high time frame PDO array? So let me just switch this all up to the 1 hour. Okay, so when I saw this, I knew that this high had technically been taken out. So we had SMT on the high time frame. I looked at this, and that's a power of 3 playing out, right? Accumulation, manipulation, distribution. We had obviously swept this high. We had clearly gone to and respected the 0.5 of this wick, or roundabouts. So I dropped down to the 5-minute charts. Now I'm looking to confirm that 1 hour reversal candle with a smart money reversal on the low time frame, which is just simply a change state of delivery. So the second thing I was looking for was continuation to enter a short trade, because once I got the smart money reversal, my eyes immediately went to the left to confirm two things: liquidity and inefficiency, we've got low resistance liquidity here, over here, and we got inefficiencies, right? So those two things I'm looking for to validate an accumulation side of a market maker model. So that confirms to me that we are shifting from accumulation to distribution, and I'm on side with the market makers. And a close beneath this would be a smart money continuation, and I can look to enter shorts with a limit order. So on that close, popped a limit order. I calculated my risk from here, and the reason being is because when I took the 2 standard deviations to project this move of this distribution leg, that gave me just 2 hour right over there. So I took it back up to 2 hour. Don't have to be perfect. And let's see how the rest of this played out. Now here's the thing, going into this next 1 hour open, with price closing beneath us, if we had closed beneath this going into the open, which is the next candle, I knew we'd get immediate continuation, which we got. And you can see there's the 2 executions. There's a loss that I'd taken on the wrong side, and there is the short. So yeah, good execution. There's that power of 3 on the 1 hour charts, and there's that stunning market maker style model. See you guys in the next one. Cheers.